Welcome to Project Syndicate, Algo Trading Systems Tutorials. In this series, we take the ideas that separate operators from buyers, expectancy, risk, market regimes, execution, and cost, and make each one plain in a few focused minutes. No hype, no hooks, no screenshots of profit. Just the trading logic, built up one metric at a time. Let's begin. You're not competing against other humans anymore. You're competing against systems that never blink. There's a romantic idea that manual trading is the pure form, the skilled human reading the market, exercising judgment, adapting on the fly. And discretion, used well, is genuinely valuable. But we need to be honest about what you're competing against. The other side of your trades is increasingly not a person. It's a system, one that never gets tired, never gets greedy, never hesitates, and executes the same rule the 10,000th time exactly as it did the first. Against that, manual execution isn't a moral virtue. It's a structural handicap, and pretending otherwise is how good discretionary traders quietly fall behind. Break down where the human loses ground. Latency. A machine reacts in milliseconds. A human reacts in seconds after perceiving, deciding, and acting. Fatigue, attention, and judgment degrade across a session in ways you don't feel until you review the tape. Inconsistency. The same setup gets taken aggressively when you're confident and skipped when you're rattled, so your strategy is really a different strategy every day. And emotional variance. Fear cuts winners short. Hope lets losers run. The exact opposite of what the edge requires. None of these are character flaws. They're the standard operating parameters of a human nervous system applied to a task it wasn't built for. Put the two workflows side by side. The human decision flow, perceive the chart, interpret it through current mood and fatigue, decide, hesitate, execute, then second guess. Every stage adds latency and variance. The machine workflow, receive tick, evaluate rule, execute deterministically, identically, forever. The diagram makes the asymmetry undeniable. It's not that the machine is smarter. A good discretionary read can be more insightful than any rule. It's that the machine is consistent, and consistency, repeated thousands of times, compounds into an edge that intelligence applied unevenly cannot match. So where does automation actually help? Precisely in the places where consistency beats insight. Rule-based entries and exits that must be executed identically every time. Risk limits that must hold even when you're emotionally invested in a trade working out. Overnight and off-session windows where a human simply can't be present. Multi-market monitoring that exceeds one person's attention. The serious move isn't to abandon judgment. It's to automate the parts that reward repeatability and reserve human judgment for the parts that reward insight, design, oversight, and the rare, deliberate intervention. You keep the thing humans are good at and delegate the thing machines are good at. The failure hides inside a flattering word, discretion. Much of what traders call discretion is not skilled adaptation. It's inconsistency wearing a nicer name. Taking the setup today and skipping the identical one tomorrow isn't judgment, it's variance. Moving a stop because it feels different this time isn't insight. It's the emotional variance the edge was supposed to be protected from. When you audit a discretionary trader's tape honestly, the losses cluster around the moments they deviated from their own plan. The moments the discretion was really just inconsistency, and a machine would simply have followed the rule. So the reason to automate isn't convenience, and it certainly isn't hype. It's repeatability. You are competing against systems that never blink, and the only way to bring consistency to a task a human nervous system handles inconsistently is to delegate that task to something built for it. Automate not to remove yourself from the market, but to remove the variance from your execution and keep your judgment for where it genuinely adds value. That's not surrender. That's structural evolution. If you want the operating notes and the companion framework for this episode, they're linked below. I also post the implementation side in Telegram. Use what is useful, ignore what is not, and I'll see you in the next one. That's the lesson. One metric, understood properly, is worth more than 100 you half know. If it sharpened how you think, subscribe and tap the bell so the next tutorial finds you, drop a like, and tell me in the comments which topic to break down next. The operating notes and the implementation side are linked below and in Telegram. Use what's useful, ignore what isn't, and I'll see you in the next one.